Welcome back. We all dream of the day we can stop working and retire, but getting to that point is different, of course, for everyone. Joining us now are Barry Fies and Hans Myklebust. Good morning to you guys.
Good morning.
Good morning.
Great to see both of you. Tell us a little bit first just what you do for your firm.
So we're a financial planning firm. We spend time with our clients, helping them really get their finances in order, whether they're in the young stage of life, getting married, having children, having a house, or focus a lot on the retirement segment, getting people ready for retirement, whether they're 5 or 10 years away from retirement or 5 or 10 weeks away from retirement. And sometimes they're on the other side of retirement, and we help them there as well.
A lot of people have been talking about Roth IRAs, something that's not necessarily new to you guys, but I'm wondering if you have any general advice for people who should have them, who shouldn't, how do you decide?
Yeah, so right now the tax environment's very, very low historically speaking, and so I think Roth topics are coming up more and more than they have in the past, and so obviously everybody's circumstance is going to be unique, and you need to have a plan on whether or not you'd use one yourselves. But there are Roth IRAs that people can use, and then a little bit more new are Roth 401ks that people have access to. And so figuring out whether or not you should utilize any of those obviously is a really big or key important part of your planning. And then alongside that, recognizing that even if you can't traditionally fund those things, that there are ways that you can even fund Roth IRAs if you couldn't traditionally fund them due to income limit contributions, things like that. And then there's also ways that you can fund after-tax 401ks that could lead to Roth conversions down the road potentially. And I know Hans and I talk a lot about Roth conversions, generally speaking, with retirees, which is a way to ultimately get Roth dollars if you aren't traditionally working and traditionally funding an account.
Well, and we have to keep in mind, too, you brought up such a good point about taxes. Things are often changing. And so from year to year, and as we get older, things can change. So it's always great to have those conversations. And I feel like as people look at things right now, it seems like the markets have settled down a little bit, but there's been a lot of ups and downs and concern. And I wonder if you guys think sort of the worst is over, or do you feel like we're more in a time where we're just sort of taking a breather?
Yeah, that's. Oh, go ahead, Hans. Sorry. I was going to say that's.
With this market that we have, there's a lot of uncertainty. You have the virus that's still running its course. Hopefully, we get a comfort level soon with the vaccine and the progress we're making, that the governors will feel comfortable opening up the states. That's obviously holding back a lot of businesses. It is a good time when the market is kind of maybe near a high point to reassess and to take a look at where you're at from a financial need. Rebalance is a key aspect of that, and reassessing your risk tolerance and any money needs that you might be coming up in the next 12 to 18 months, that as we hit one of these high points, and we're going to go up and down, reassess and reposition your finances for that.
I wonder about stocks in particular, since they're at an all-time high, and you mentioned a great point to sort of reassess right now. What about people who have company stock, or like our corporation, for example, you can buy company stock at a slight discount. Is company stock a good idea right now?
Yeah, we've been getting a lot of questions about company stock. I think some of that has to do with just the market fluctuations that are occurring this year, but also the fact that more and more you're seeing some compensation for individuals annually, not just in the form of salary, but in company stock, whether that's restricted stock or even stock options. And so I think that the biggest thing to be aware of when you're receiving any of that compensation, or when you have a stock plan at your employer, is that you really want to have a plan and a strategy for what you're going to do with that stock over time. I think a lot of the times people just sort of leave it sit and kind of grow over time and imagine that maybe they'll use it in retirement or down the road, but really having a plan for how and when you're going to distribute or reduce your exposure to that stock is very important. And a lot of the times that centers around wanting to not be overly concentrated in just one stock, even if it is your own company's stock. But then also when it comes time to sell, some stocks have restrictions. Some stocks have windows that you can sell in. Sometimes there are options that you can receive in compensation. And so the price of those, right, relative to the taxes that you'll experience when you do a liquidation are all really big factors to consider. And you just want to make sure that the plan that you have is taking some of those things into consideration so that you don't feel like you're in a really bad spot where you're forced to sell at a time that you don't really want to sell, maybe due to the stock price, or at a time where there's a negative tax consequence to it. And so making sure that your stock isn't underwater or anything like that, or that taxes aren't going to be too much of a burden when you decide that you need the funds is incredibly important. So I know Hans and I just stress that you have a plan or a strategy as it relates to company stock.
Such good and important information. Thank you to both of you for joining us.
Thank you.
Thank you.
Absolutely. And don't forget to join Barry and Hans for a virtual trivia and beer tasting in partnership with Mob Craft Beer. Now that sounds fun. It's happening Friday, October 16th from 5 until 7 p.m. To register, go to Eventbrite and search Leader. There's the spelling of it there. It costs $50 a person, and all proceeds will go to Women for MAC to help fight against childhood cancer, which is a cause we support. And if you're interested in learning more about a career as a financial advisor or to reach the people that we just talked to, you can reach out to Jaala Sullivan. Her email address is jaala.sullivan@nm.com, or you can give her a call too. The office phone number is 414-203-6015.